Welcome back. Earnings heavy day. Lots of big earnings coming in from banking, auto and capital goods today. Let's get Nirmal Jain of India IIFL-Nirmal to tell us how he's feeling about the market now. But Nirmal, morning. Thanks very much for joining in. What do you think? Are we entering some kind of a corrective phase here, or you think we should be hitting new highs in the next few weeks?
Yeah, it's very difficult to put precise numbers, but maybe at least based on current facts and or our probability basis, I would say that it's unlikely that market will correct more than 10-15% from here, even in corrective phase. And on the positive, on the upside, I think it's possible. I mean, I would say 50-50 chance probability that within a month, market will surpass its previous peak. But if you ask me by March or maybe by this financial year or by next quarter, I would say that 80-90% probability that market will very easily cross the previous peak. And maybe in the next year, one should look at a target of 25,000 Sensex or that kind of growth in the market.
The big events, though, Nirmal, that the street is watching out for. First, of course, the second round of quantitative easing that is likely next week. And we also have the Big Bang Coal India listing as well. How will all of this really change the contours of our market?
It will have impact on the market. It's not something which will change the course of the market completely upside down, but it will definitely have impact on the market. Coal India listing, I'm very positive and optimist on that. So that will reinforce the confidence in India and also the large cap new companies that are coming to the market. Quantitative easing, if it is not up to expectations of investors, then that might impact globally commodity prices in particular, because a lot is dependent on what kind of investment and what kind of liquidity is there in the system for commodities to continue its rally. Impact on India will be, to my mind, short term, if there's an event, it will always have an impact. But to a large extent, in a few days, again, fundamentals will be driving the market. So this will be, these are significant events, but I won't say that they are game changers.
What's your general drift? I mean, I've heard you say that in the next 1 quarter will certainly be higher and the next 1 year much higher than this. So you think we are in a secular kind of a bull market out here and the trend is not in question?
I think we are in a bull market, but any bull market also you won't see market rising every day. So there will be some blips and some corrections, and which are healthy for the market. Markets have already run up a lot, so maybe if they take a breather, this is good from longer term perspective. Coal India is a great IPO. I think FI's response has been extraordinarily good, particularly keeping in mind that they have to put in 100% of money with the application, and there's almost 0.5% or more than that is hedging cost for the money that you put in. So I think this issue will attract many new FIs and a lot of money from existing FIs as well, and will give a lot of confidence to government for this investment process, that if you price the IPOs very well, then any amount of money can come in. In fact, we had $25 billion coming in by way of FI money throughout the year. And in one issue, FIs have put in more than that kind of money, which shows the capacity of the market to absorb new money if pricing is right. So from that perspective, I think market will remain positive. One should look at this, the new Diwali year with a lot of optimism. They won't give you 100% return what they probably would have given in recent past, but at least 15 to 20% or maybe around 18 to 20% return is something that one can reasonably expect for in a year going forward from here.
What about the refund that comes in next week from Coal India? I mean, there's so much expectations that all of this money might perhaps be pumped back into the market. Do you see something of that sort happening?
No, I don't think that any significant part of money will come back to the market as such. But Coal India in particular will have good demand from FIs, and they'll try and mop up all the selling that comes from HNIs or retail investors. This is the largest coal mining company in the world, and the fundamentals of the company are very good. Their response to IPO shows that they have a huge appetite for this. But the money is not that the $25 billion will come back in a week's time. It will come over a period of time, and it will come not only in one stock but many stocks. So that alone is not a significant factor, but the continuing results as well as continuing flow of money will keep driving the market.
What about the domestic money, Nirmal? You talk to so many domestic institutions. When do you think retail and domestic money starts getting into the act? Because so far most of it has been out and we continue to see redemptions every week for mutual funds.
Yeah, it's a pity as well as a paradox because domestic mutual funds and institutions have been sellers, net sellers in this market. I think domestic money has gone, mutual fund mobilizations have gone down. Life insurance also has been not as significant a growth as historically people expected. So, of course, domestic money is going to life insurance sector through a large life insurance companies like LIC and SBI. But a lot of it is going also into bank deposits. But this trend, I think, will bottom out and we'll see that mutual fund mobilizations become positive in the next few months' time.
Today. Nirmal, we were just talking about earnings. What have you made of earnings season so far? Has it been a lot of upgrades for you or some hits and some misses?
I think results have been a mixed bag because some of the large cap results have been good and some of the results have been disappointing as well. And in mid cap, some of the stocks have given very good return or results and a positive surprise. But overall, I would say it is satisfactory, but it's been quite mixed because if you look at cement companies or Idea or some such companies like Wipro, they haven't given good results vis-a-vis expectations. But companies like, say, there are quite a few other companies, they have given good results. Some of the pharma companies or companies like Infosys. So I think it's been a mixed bag, and overall, I would say that more or less in line with expectations on an aggregate basis.
Lots is hinging on the dollar index as well, that has been weak for a long time. How are you reading commodities in the light of the dollar movement?
I think fundamentally dollar is weak, but the paradox today is that inflation is high in India, and from a pure theoretical purchasing power parity point of view, rupee should be at a discount and should not appreciate much. But fact of the matter is that US has lost that image of the safe haven and greenback on which one can rely upon. So I personally feel that given the fundamental story in the US and European countries, the currencies of developed markets over the next 10 years, if you take a real long-term view, will depreciate vis-a-vis currencies like Indian rupee or even other developing markets that are growing faster. Having said that, in the short term, it's very difficult to predict any movement. People thought that this kind of money from Coal India will result in further appreciation of rupee, but it did not happen, which is positive. I personally feel that rupee will remain range bound in around 43.50 to 45.50. So it's very unlikely that at least in the near term it will move beyond this.
Thanks guys for joining in and greater detail. Right now break, markets just about in the green. More on Alok Textiles and other results which have come in over the last couple of days after.